All right, let's get right into it. Today, we're tackling one of the biggest financial questions you'll ever face, a decision that could literally be worth millions over your lifetime. Should you rent or should you buy a home? You've heard all the arguments, you've seen the crazy headlines, but today we're going to cut through all that noise and look at the actual data. So, is buying a house a bad investment? I mean, let's be real. With home prices through the roof and interest rates climbing, the whole idea of owning a home can feel totally out of reach for a lot of us. You even hear some so-called experts saying that right now, buying is just a terrible investment. But is it? Is that actually true? Oh, yeah, you've definitely heard this one before. It's the classic advice you get from a ton of financial gurus. Just rent and invest the difference in the stock market. You'll end up richer. And you know what? The logic seems simple enough. Rent can be cheaper each month, so you just take that extra cash you'd be spending on a mortgage, you throw it in the stocks, and boom, easy, right? Well, on the surface, maybe. But that line of thinking misses a huge piece of the puzzle.
But hold on a second, because when we stop looking at theory and start looking at the real world, at how millions of actual families build their wealth, the data tells a radically different story. In fact, what we're about to show you might completely flip the script on how you think about where you live.
40x. Just look at that number. According to financial expert David Bach, the average homeowner in America isn't just a little bit richer than the average renter, they are worth 40 times more. Let that sink in. Not 4 times, 40. We're not talking about a small gap here. This is a massive, massive wealth chasm. So the big question is, how is a gap that huge even possible? What's really going on here? Well, that's what we're going to break down. We're going to look into this 40x wealth gap and see why a home is so much more than just a roof over your head. For most people, it turns out, it's the main escalator to building real wealth. And look at this. This just lays it out in black and white. The average homeowner, their net worth is over $400,000. The average renter, $10,000. Just think about that for a second. That is a life-changing amount of money. It's the difference between a secure retirement and struggling to get by. And here's the kicker. This is not a coincidence. Okay, so let's get into the first big myth we need to bust. This is the #1 argument you always hear for renting. The stock market always wins. The whole idea is that you're just better off putting your money in stocks because you'll get higher returns. And listen, on the surface, the math seems to add up. If you look at the long-term averages, yeah, the stock market has returned more annually than home prices have gone up. But here's the thing. Comparing those two numbers directly is a huge mistake. It's not an apples-to-apples comparison. It's kind of like comparing a speedboat to a cruise ship. Sure, they're both moving, but one of them has a secret weapon, a hidden engine that changes everything. And that secret engine? It's a little thing called leverage. See, when you buy a house, you almost never pay for it all in cash, right? You get a mortgage, and what that really means is you're using the bank's money to control a huge, valuable asset. Think about it like this. It's like getting to buy a $100 stock for only $20. But if that stock goes up, you get to keep all the profit from the full $100. That's leverage. Let's walk through how this actually works. Say you put down $40,000 for a $200,000 home. Okay, so you now control that entire $200,000 asset. Now let's fast forward a bit, and the value of that house doubles to $400,000. Your profit is $200,000. But here's the magic part. That's a $200,000 profit on your original $40,000 investment. That's a 500% return on your actual cash. You just can't get that kind of return in the stock market without taking on some absolutely insane risks. That is the power of leverage. All right, let's move on to myth #2. This is the one you hear all the time. Renting is cheaper and more flexible. And okay, let's be fair, the flexibility part can be true, especially if you move around a lot for your job. But the idea that it's fundamentally cheaper, well, that's where things get a little misleading. This quote from David Bach really nails it. Who do you think pays for the real estate taxes, the insurance, and the things that break when you rent? You do. See, people think renting is cheaper because they don't have to worry about property taxes or a broken water heater. But here's the reality check. Your landlord isn't running a charity. They bundle every single one of those costs, and then some, for profit, right into your monthly rent check. And if you really break down where your monthly payment is going, the difference is just staggering. First off, your rent, it's almost guaranteed to go up every single year. But a fixed-rate mortgage, that payment is locked in for 30 years. It doesn't change. Second, that rent check you write builds exactly 0% equity for you. Nothing. Meanwhile, every mortgage payment is like a forced savings plan, building your ownership stake. And maybe the most important part, your rent is paying your landlord's mortgage. Your mortgage, on the other hand, is paying down your debt and building your wealth. Okay, so if these common myths are, well, myths, then what are the real reasons home ownership is such a powerful way to build wealth? And look, it's not a magic bullet. There are definitely risks. You've got maintenance, property taxes, the market can go up and down, but the core pillars that build wealth over the long term are just undeniable. So let's break them down.
It really comes down to these four powerhouses. First, you've got forced savings. Every single mortgage payment you make is building your equity. It's automatic. Second, the tax breaks are just incredible. In the US, a married couple can make up to $500,000 in profit on their home and pay zero tax on it. Seriously. Third, you've got that superpower we talked about, leverage, controlling a huge asset with just a little bit of your own money. And finally, stability. Having a fixed housing payment while rents are skyrocketing all around you, that's huge.
So, let's circle back to that original idea, the theory that renters will just diligently invest all that extra money they're saving. Well, in the real world, that turns out to be, and I'm quoting here, an absolute freaking myth. It sounds good on paper, but life happens, right? That extra $200 a month you were supposed to invest, it turns into a few more dinners out, that new phone you wanted, it just gets eaten up by lifestyle creep. And then it's gone. You know, this whole conversation goes way beyond just your own retirement. The decision you make about renting or buying, it creates ripples. It can affect your family for generations. We're talking about building something that actually lasts.
And this right here might be the most important point of all. Generational wealth is created through home equity. For most families, this is it. This is how you pass something meaningful down to the next generation. That equity in your home becomes the financial foundation that gives your kids a leg up in life.
So we'll leave you with one final thought to chew on. Every single month, you're going to pay for housing. It's the biggest expense for almost everybody. The only real question is this: when you make that payment, are you building your wealth or are you building someone else's?